the course materials page, for which you have the link, which I hope you'll consider bookmarking rather than going through D2L, UMLearn. And when I don't have the link handy, I type in bit.ly/RobsonDan, and it comes up that way as well. Not a big fan of 100% exams. We'll have assessment throughout the course with 4 short quizzes, each 15 minutes long, all in class, and a midterm 1 hour long, all in class, and a final exam at the end. The final exam will be for 45% only. It will not be cumulative. That is, it doesn't go all the way back to square one. Probably 20% of the content only on the final exam will be for stuff that was covered in the midterm. Just letting you know. I really want to assess you and have you tell me what you know all the way through the course, not just at the end. I also hate cramming, and honestly, I hope this is not a course that you feel that you have to cram for. Honestly, I don't think I have much to say about the course materials or the course outline unless you have any questions. This is the textbook. Please get it. Please bring it to your next class. And we have Income Tax Acts, Frank, hopefully upstairs waiting.
I told them that we'll need some muscle to carry them down with you.
Awesome. We can do that at the break. I'll also post all of last year's exams, final midterm quizzes, etc., and solutions as we go along. The first quiz is on January 21st, so in 2 weeks. So later this week, I'll post quiz 1 from last year, just to give you an idea of what a quiz looks like. It's a 15-minute multiple choice deal, honestly. It's not terribly onerous. What I'm trying to do is encourage you to keep up with the readings and the practice questions. Practice questions I will also post to the course materials page. The best way to get a hold of me is that I will post Q&A pages, links to Q&A pages, for you to post anonymous questions, which I will answer generally between 2 to 4 hours, 7 days a week. So if you're studying on the weekend in the module on associated corporations and you have a question on associated corporations, there'll be an associated corporations link. Post your question and I'll be back to you that same day for sure, including on the weekends. Honestly, I look at this more quickly than email, so if you want a quick and a good and anonymous, and you want to post anonymously, this is the place. I also find that so many of your questions will be similar person to person that hopefully you'll do a scan when you go into the pages and perhaps other people have asked the same question and it's been answered already. Pretty important book for articling students, etc. My favorite part starts on page about 63. Corporate and commercial transactions, particularly things like attend at the closing of transaction. So that's obviously to make sure that documents get executed, etc., etc. But to have also participated in the drafting of the documents. And those documents, I can assure you, will have some aspects that were dictated by tax planning by the vendor and or the purchaser. Determine the form of organization suited to a client's needs, which for the purpose of this course, will primarily be corporations and partnerships. The client's needs obviously include things like whether the client wants to enjoy limited liability protection, and also tax planning, of course. An election under Section 85 of the Income Tax Act is a reorganization by which you, for example, as a proprietor of a business, might like to transfer your business assets into your corporation. Section 85, therefore, a very important tool. We'll discuss it thoroughly and is the only, I believe, Income Tax Act section actually referred to in this document. It is that important. Negotiations in respect to purchase and sale of shares and assets and so on and so on, again relating to transactions by which businesses get bought and sold. And advocacy. Attended meetings with officials of CRA and the Department of Justice with regard to assessments and appeals and court proceedings, et cetera, et cetera. Extremely important work for lawyers. Any questions so far? We're into actually an interesting time. Can anybody define for me what is meant by disruption in business? Or give me an example of significant disruptors. Yes?
So a disruption when some sort of factor affects a business's ability to generate revenue or profit. So a disruptor could be a new competitor in the market or a volatility in the market.
Quite right, all correct. Yes?
I was just going to give an example of Netflix on Blockbuster.
Very interesting. My wife and I cut the cord. We have no cable TV at my house. We have subscriptions to Netflix, Amazon Prime, and we're thinking about Crave. Total disruption. We were happy as clams to pay $100 a month or whatever it was for, I don't know, 6 million channels that we watched 3 of. Netflix totally disrupted that. We don't have Uber in Winnipeg. We've got Tap cars. Anybody used Uber or Tap or any of those services? Yep, same deal. Big shock, by the way, to folks like taxi drivers and so on. Skip the dishes. Not only disrupting the delivery of food, but also disrupting the restaurant business itself, whereby a restaurant, to stay competitive, feels that they have to partner with Skip to be on top of what is perceived as their customers' needs. Very interesting. 10 years ago, well, I guess Netflix was around 10 years ago, but actually Netflix 10 years ago was mailing CDs to people, which I guess disrupted the heck out of Blockbuster. Maybe you don't remember Blockbuster. But honestly, the next thing and the next thing and the next thing. I have 2 brothers. They are both radiologists. They are high-end doctors that make close to $1 million a year apiece. I keep telling them that their business may not exist in 10 years because artificial intelligence. This was a last week story out of the UK, where apparently for mammograms, the National Health Service there, which is their government-owned health operation, require 2 physicians to read each scan. And they did an experiment to see if, well, we have 1 physician reading it and we give the other to a computer, how will that turn out? And the answer is it turned out better than if 2 physicians looked at it. This is bigger than, say, 20 years ago when someone said, well, look, all you have to do is send the slides to a lower cost jurisdiction, such as in Asia someplace. They'll get read by a qualified physician overnight and then back to you in the morning. This is even cheaper than that because this is by way of taking the physician out of it altogether, except perhaps the physician input into the creation of the AI program. Tax returns? I myself went to my firm and said, why are we doing tax returns in Canada? Like, why don't we get tax returns done elsewhere? And you know, the real answer is what they do in Europe, which is that they do not have personal tax returns. Who needs all of the slips and stuff, you know, like we sit there and we input this stuff, or now we can scan them into our phones actually. CRA's got all those records. They've got copies of all that already. Like, why doesn't CRA just give us our tax return and we say yay or nay, and that's it? That's as it should be. That's how it is now in countries like Denmark and others. That's disruption. That means that the accounting profession, for example, would simply not exist going forward as we know it today. Now, I would be excited as heck about that, because that means that instead of me having to worry, as I did a decade ago, about getting 200 personal tax returns out the door during 3 weeks in April, I could instead spend that time helping people do tax planning, which obviously is more interesting, adds more value for them, and makes me more money. So I say bring on these disruptions. The disruptions in corporate tax are of this type, if I get this set up properly. First of all, CRA started a few years ago. CRA started a few years ago to do something smart, which is to say, like, we've got 35 million individual Canadians and hundreds of thousands, maybe millions of corporations. How do we decide which tax returns to look at? Why can't we have a scan done by a computer based on parameters that we can create that will show us what we should be auditing? And then at the same time, when we are fighting battles, we, the Department of Justice, are fighting battles on behalf of the Government of Canada in tax court, federal court of appeal, Supreme Court, what tools are available for us to avoid having rooms of people doing low-level research on court cases? Can we not have, as referred to here, a scour of decades of course law on tax matters? And then the law profession weighed in. 6 weeks ago. If Revenue Canada is using AI, what about taxpayers, especially corporate taxpayers? Tax law is one of the areas most susceptible to AI solutions. What this means is, within the individual knowledge of a particular lawyer, be she or he one of the Canadian leaders to which I referred earlier, beyond that knowledge is knowledge of every other lawyer in Canada and the experience that has come from every court case in Canada. And we're finally now getting to use tools, rather you will be getting to use tools that honestly will make you 100 times more powerful than you could have been a decade ago based on artificial intelligence. And artificial intelligence in the law profession seems to be ramping up faster in corporate tax area than anyplace else. This is for your interest only, not examinable. I will post these articles to the materials page, read them at your leisure, and I hope you find it interesting. I was actually shocked to find the level of disruption that is happening in what I thought was a relatively stable, I'll say, sometimes boring aspect of professional life. It's actually the most exciting. Who here has taken a tax course either in this building or at the Asper School? Excellent. Can someone summarize for me the taxation of individuals?
You start with income, you subtract deductions.
Oh, it's too much detail for me. How about the rates of it, rates of tax they're on?
What do you mean?
This kind, this kind, this kind?
Marginal, progressive, and regressive?
Yes.
Sorry, yeah.
Quite right. So this final curve is how tax rates for individuals line up in Canada and the United States and most other first world countries. The reasons for that are economic policy reasons. They're not really reasons of jurisprudence. They are reflected in the statute, obviously, and all those who administer the return. And we are all part of the administration of the tax system. Hew to these rates. So generally what this means is between 0 and some number, the tax rate will be this, and between that number and this number, the tax rate will be that, and this and that, and so on. And here's how it looks if you want to make a decision about whether or not to incorporate based on tax rules. So here I'm going to, and I would invite you to take out your phones and do the same. I'm going to do a search on simple tax calculator. Simple tax, all one word, calculator. My favorite single page in Income Tax Act, or pardon me, on the internet. This is very reliable industrial grade calculations. I've done calculations myself by hand to verify them. I just love this. And on your phone, it's just as good interface as on the computer. We're in Manitoba. I'm a partner in a law firm. And I'm going to make $300,000 next year. I guess that'd be working part-time, Frank, like maybe 3 days a week. Yeah. My total tax is $127,000. My total tax is $127,000, which is 42% of 300. So I'm paying essentially 42% tax. Now, I'll be honest with you, I actually don't mind paying all the tax that I should pay. I realize that universities and hospitals and roads and bridges and stuff like that come from someplace. But I'm also okay with the idea that if there's some way that I can reduce my tax, I'm quite okay to do that. And some of my clients were as well, and that provided a livelihood for me. 42% tax. Here's how it plays out for people of even higher income. I'm going to pardon me, I will post a link to this as well. Tax Facts and Figures is an annual publication from my old firm, PwC. And honestly, it's full of numbers and a little bit, but it's useful in some respects, and I'll show you some important respects. Let us skip ahead to page. Let's see. Bingo. I'll go through this very slowly because it's not easy to read. Sorry for the scrolling. What this says, so this Manitoba here, $300,000, 2019, this is all 2019. This entire course is 2019. We actually don't know yet what 2020 tax rates and other things will be, because we get notification of changes to taxes typically in the budgets, the federal and the provincial budgets. Those don't happen until the spring, sort of March, April timeframe. So this is $123,000. Actually very close to the 126 that we saw just now from Simple Tax. Simple Tax added a few dollars for Canada Pension Plan premiums. The bare income tax by itself is 123. Again, about 42% of income, $300,000. If I'm a real whiz-bang partner law firm and I make $1 million a year, that's $476,000 of tax, federal and Manitoba tax payable, 47% of my income. Now, regardless of how I feel about taxes politically speaking, and as I said just now, I actually don't mind paying tax. I mean, tax is how we pay for things in Canada. Regardless how you feel, you will have a strong incentive, I suggest, to reduce your tax if you can. Any questions so far? We'll talk about the legal context for tax planning and tax avoidance soon, and also tax evasion, which I'll give you a preview. If you successfully avoid tax in the manner that I'll describe in a few minutes, your client will love you, your client will take you out for lunch, and I will take you out for lunch. If you evade tax, I don't know you, and I won't come and visit you in jail. I hate to be harsh about that, but there's fewer things I detest in life beside tax evasion. Partly because I find it lazy. That's probably the reason. On top of being dishonest, it's also lazy. I can't abide it. But tax avoidance and tax planning all day long, some of the most interesting work that you might do. I'm going to open the textbook. I know that a few of you have, a few of you don't. Please get it before next class and bring it. I will, today and probably today only, put it up in front of you so you can see what I'm talking about. This is the federal tax rate on each dollar of income above $210,000. And that's the part when you combine it with provincial taxes that results in close to 50%. In fact, in some provinces, higher than 50%, higher than 50% of the income. These are what's meant by the progressive marginal rates, and those are indeed the actual rates for 2019. Turning now to page 422. We're going to talk about big corporate tax and small corporate tax. First, about small corporate tax. If I'm, for example, a partner in a law firm, or I operate a retail store as a proprietor, or some other service operation, or maybe manufacturing or something, if I incorporate that business, that is, if I transfer all of my assets into a corporation and then use the corporation to operate the business, I'm taxed at so-called small corporation rates. The small corporation rate is 9%. The federal rate is 9%. your client says, 9% compared to what 33%? Federal apples to apples, corporation versus individual. That's mind blowing. Create me a corporation right now, please. And it gets even better. So the 9% is the federal corporate rate on small business income, small corporation tax. %9 federal. But we also have to add Manitoba. For provincial tax rates, please go to page 425. Income eligible for small business deduction, that's what we're talking about here, is small business tax. It's the lowest rate in the world. It's not just the lowest rate in Canada. I mean, you can't get any lower than zero, so I'm pretty confident to say it's the lowest rate in the world. I don't even know if that's good policy. And I'm not going to go there, that's not the purpose of this course, but I'm going to tell you that if I'm making $1 million as a proprietor or something, instead, I can make 9%, I can pay 9%. Not on the whole million, there are some limits that we'll talk about next class. But 9%, 50%, awesome. There's nothing else you need to know about why people are so excited to operate their business through a corporation. Now, I've said the word business a few times. This is about business income. It's not about income that would otherwise be considered as employment income. We'll talk about the difference in the next class. So I need to be carrying on a business here. And whether it's a business or employment is honestly kind of subjective, and Skip the Dishes and other people, and Uber in California, are about to test that in the courts, which I'm watching very carefully, and I hope all of you will also. Not in California, it's not so much about income taxes, it's about stuff like benefits and that type of thing. Honest to God, the same issues, and might even result in differences in the way that Uber drivers and someday Skip the Dishes folks are taxed as well. Any questions so far? Please go to page 428. Bottom of the page. So big company, small company, we're just going to stay right now on small company. So here's what happens. On $1 million, or in this case $1,000 of business income, and here they use a 13% corporate tax rate. 13% reflects kind of an average provincial rate of 4% across the country. Ours is 0, other provinces have 3 or 5 or whatever. Average 13% total, 9 plus 4. $1 million earned, $870,000 retained earnings. So retained earnings means income after tax has been paid on. And that's money that's available to the corporation for investing, buying new machinery, hiring more staff, those types of things. Adding on to the business, international expansion, and so on. So the policy reason for keeping this tax rate so low, and in fact would be $90 in Manitoba, is to allow corporations to do those things without being encumbered by income taxes. Now, the individual shareholder says, well, I need to buy groceries and make mortgage payments and stuff like that, so I'm going to take a return out of the company, which is called a dividend. So interest is what gets paid on a debt obligation, and a dividend is what gets paid on the share of a corporation. And the government says, fine, that's taxable income in your hands, and we will charge you a certain amount of tax. Such that when you combine the tax paid by the individual shareholder here and the tax paid by the corporation, we come up with about the same rate of tax as if the money was earned directly by the shareholder, if the shareholder were an unincorporated business, a proprietor. In this example, the shareholder would have paid tax at 50%. And honest to goodness, if the corporation earns the money and then pays it all out to the shareholder will have paid, the corporation and the shareholder combined will have paid almost exactly as much as the individual would have paid if the individual hadn't incorporated in the first place. This is loosely referred to as integration. Hopefully you talked through that in your first tax course. So then what's the point of incorporating? What's the tax point of incorporating a business? Yes?
You can use the money that's in the corporation to do things and earn more money before you give it to your shareholders.
That's exactly right. So you can do things and earn more money before you give it back to shareholders.
Like an RSP.
One example of that is to use the money for retirement, for the retirement of our hypothetical partner in law firm, for example. It's almost like having, as was correctly described, a second RSP. This particular RSP, let's call it, arises from, say, $1,000 worth of income. There was taxed at only 9%. Therefore, there's 91 cent dollars of retained earnings that can be invested and grow over the course of the lawyer's career, assuming she has, like, say, a 35-year career. If the lawyer, instead were not incorporated, she would have suffered 50% tax at the outset and would only be able to invest 50 cents in the dollar, in this case $500. But otherwise, she is investing in Manitoba at $910. Her money will grow nearly twice as fast in the corporation as if she had it personally, that is, earned it personally, retained it personally, and invested it personally. Yes?
Is a dividend not a capital gain?
Correct. A dividend is not a capital gain. A capital gain is what we get if we sell the shares of the corporation.
Sell the shares.
Yep. We'll talk more about that difference during this course as well. The whole benefit of having a corporation from a tax standpoint is what we do with the money in between here and here. If we can keep the money in the corporation for a long time, awesome. If we figure out some way to make it grow, like either by investing it for the sake of the retirement of the shareholder, and that might be in things like marketable securities, stocks and bonds, that type of thing. Or if the business owned by the corporation says, hey, we can expand this business or grow it or pay off debt or those types of things with 91 cent dollars, why wouldn't we do that all day long? There are some other smaller advantages, which include if we have more than one shareholder, we might in some cases be able to split income among individuals in a family. We'll talk through some of those opportunities and also some limitations in this course. But really the main thing is to be able to take advantage of this $870 or $910 depending on the provincial tax rate advantage. Any questions so far? I might say that the decision that a shareholder makes about how to take money out of the company, and we'll have a whole module on taking money out of the company, is sort of an annual decision and involves what the business needs, what the individual and her family need, what tax rates are this year, what tax rates are next year, how much money to take out, how much to leave in. But generally speaking, it is to everybody's advantage to leave as much money inside the company as possible. The other way by which a shareholder employee can take money out of the company is by receiving employment consideration, a bonus, salary, etc. And there's calculations that accountants do year to year to figure out what the right mix is. You should not be burdened with those calculations. You should only know that somebody has to do those calculations. And you should make sure that your client is getting somebody to do those calculations. That's actually a pretty good place for a break. If I could trouble you to come back at 2 p.m., please, that'd be awesome.